Well, guys, the Federal Reserve just announced if they're going to increase rates or decrease rates. So we're going to make a video really explaining what they did. So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. If you guys want to learn about investing, check out our school, and let's just jump into this. So all right. I think we all know the market over the past week, past 2 weeks has been like so volatile. We've seen days where it's getting a ton of buying pressure, days where it's getting a ton of selling pressure. Now, why are we getting sell off? Tariffs and uncertainty. Tariffs, does put a lot of strain on a lot of people, and a lot of people just want to pull their money out of the market and go, okay, let's wait and see what happens, right? Now, for me, crashes and sell off like this, I look at it and I'm like, I can buy these stocks at a cheaper price. Thank you very much, right? So I think that's the approach I have. I don't know about some of you guys, but I think that's the smarter approach. We know the S&P, the Dow Jones, the NASDAQ has historically always recovered. And yeah, and on top of that is right now we are in correction territory. So we're in a correction. One of the things is that this is normal. This on average happens every 1 to 2 years. So it's normal. It's healthy. Yeah, it's healthy. I know it sounds crazy, but imagine this. Imagine running full speed for a year. You're going to want to pull back and take a breath and get a drink of water. That's what the market's doing. So let's look at the Fed's rate, the Fed's decision. So they decided to hold interest rates. So they didn't increase it. They didn't decrease it. It's kind of that middle ground, right? The markets wanted a cut. A cut helps fuel the economy. The reason why it helps do that is because people are more incentivized to take on loans. That could be a car loan. That could be a mortgage. That could be just honestly doing home improvement. Just help stimulate growth. Now, right now, okay, let's go ahead and see this. So the Federal Reserve's hold interest rate steady still sees two rate cuts this year. This is why we're getting a little buying pressure, in my opinion, after hours, right? Looking at like the S&P 500 ETF, we've seen a little buying pressure after hours because of this, in my opinion. All right, so the rate setting Federal Open Market Committee kept its key borrowing rate targeted in a range of between 4.25% and 4.5%, where it's been since December. All right, the FOMC downgraded its collective outlook for economic growth and gave a bump higher to its inflation projections. Officials now see the economy accelerating at just a 1.7% pace this year, down 0.4% point from last projection in December. So, in addition to the rate decision, the Fed announced a further scaling back of its quantitative tightening program, which is slowly reducing the bonds it holds on its balance sheet. So that's what everything happened, right? That's what's going on. So kind of that middle ground where we're not going to be getting a lot of buying pressure nor selling pressure. I think the market right now, in my opinion, is more stressed out about tariffs and what that could hold. So for me, guys, if you're wondering, should you invest? Yes. In my opinion, do your research, but in my opinion, invest. Historically, the market has always recovered. And I know it seems scary because if you look at, zoomed in market where we just see the sell off, but the thing is as you look at the daily, and yeah, that little dip right here, that's a pretty good dip, right? But as we start zooming out, look at that dip. Look how small that dip gets. So just have that long-term mindset. You guys will be in a great spot. You guys can even see these crashes in here. They've always recovered. And during these times, people think the world is ending. The world is ending. Oh my gosh, we're never going to recover. And look at us now, killing it. All right, guys, I hope you guys enjoyed it. Smash that like button. We'll see you guys in the next one. Hope you guys enjoyed it. But more importantly, hope you guys learned something. Take care.